everyone, it's Kaylee, the teacher of finances, and it is the typical Mythbuster Mondays. My voice is slowly coming back, so I'm happy about that. I don't sound so bad today, which is great because I was sounding super rough this weekend. So I'm so happy. Now when I record stuff, I won't sound crazy, but anyways, if you're watching this live, if you'll drop me a 1 in the comments. If you're catching this after I go off of live stream, if you'll drop me a 2, that would be awesome. Today I'm going to hop on here. I'm going to get going quickly because I have a bunch to cover. But on Mondays, we always talk about myths. And most of the time, I go over different types of myths within the insurance industry. Just because there's a lot of them out there, especially with social media now. You see all kinds of stuff. And so I just like to take those myths and kind of give you the truth behind them. So as I scroll all the time, I see people make comments about social media, about life insurance and how it's a scam and it's this and it's that and so on. And I just wanted to kind of debunk one that I hear all the time. And that is going to be that term life insurance is the only form of life insurance. And so that's not true. Now, term is going to be your most affordable option depending on your age and your health, but it's not the only option. And so I feel like that's where a lot of people get kind of thrown off and say it's a scam because people have heard about someone taking out a term policy and having it for 20 years and then them dying at year 25 and not renewing or converting. And so then they feel like it's a scam. And so you just have to make sure you're educated. And so as a teacher of finances, that's what I'm here to do. I want to educate you on what's available and what different options you have, and what's not true as far as the myths that you hear all the time. So kind of just going into term insurance is a product that covers a risk of you dying too early. So typically you get a high coverage amount at a lower rate. It is set for a specific amount of years that you and your agent come up with that you want to do it for. You can do it anywhere from like 10 to 30, just depending on your age. Most of the time people use it whenever they're younger because their debts are higher. So if something happens to you, you have a large lump sum term policy, and it's going to be able to cover everything and allow your family to keep living in the house that they live in and doing the things that they do, because it practically covers all of your debt. But again, it's very affordable if you take it out when you're really young. Typically, you can get anywhere from 75 up to $1 million in coverage, 75,000 up to $1 million in coverage. So, like I said, it's very affordable for a lot of coverage. The thing about taking out term life insurance that makes it so great for you is the fact that if you take it out when you're young and super healthy, now you have guaranteed insurability, meaning that if something happens to your health and your health changes and you get ready to convert it, then they're still going to insure you. So I have some couple questions that I'm going to give you in a little bit that you need to ask whenever you're looking at policies with an agent, and that'll help you understand like the types of questions so you understand what type of policy you're looking at. Also with term, a lot of the times people say, oh, well, I'm just throwing my money in the trash because I don't get it back. Again, not always true. Some companies have a return of premium, meaning that when your policy comes to the duration of the term, when it comes to the end, then you can get your premiums back in full. So if you pass between the time that you take it out and before the policy comes to an end, then your family gets the full death benefit. But if you outlive the policy, then you can get the return of premium and get those premiums back. Again, that's not with every term policy, but it is available. It's just something you have to know, and you have to be able to ask those questions. So like I said, I'm here just to give you some education today. I just want to be able to explain different things in different terms, because I had no idea before I got into the financial service industry what any of this stuff meant. And I think it's so important to have awareness, so if you are shopping or in the market for a policy, you know what to look for and you understand. So permanent life insurance is also available, and it typically is going to have a cash value. It grows over time. There's several different types of permanent. A lot of the times you hear whole life or maybe universal life. They all work a little bit different, but the thing with those is that those are going to go with you for the duration of your life. There are specific questions that you want to ask when it comes to those types of policies, but for the most part, they go with you for the rest of your life. a permanent product policy, a permanent policy, you can actually get a high death benefit in those, but the prices are going to be a little bit higher than they would with term, just because of the fact that it goes with you for a long time and you're going to be utilizing it, plus it has that cash value. Again, such a good thing to have though, because you have that guaranteed insurability. So no matter what happens to your health, the insurance company is going to still go ahead and like approve you and insure you. You hear this with like children's whole life, same thing. It's a permanent product for a child. So if you take it out on a child when they're young and they're super healthy, get it for a good rate. And then now they have coverage, for however long. And then the death benefit on those, like I said, it just varies. It just kind of depends on what you're looking for. So the next thing I kind of wanted to touch base on is like a universal life policy. So a universal life policy is a permanent policy, but it gives you the option to have flexible premiums, which is nice. So kind of depending on what your premium is and how you work that premium during the duration of the policy determines the cash value and the death benefit. So it's a little bit different. It's a little bit more complex. That would be like a whole nother live that I would have to do. But that option is there, and it does have that death benefit with the cash value. And then there's also other types of universal lives that are way more in depth as well, that are like indexed. And so they actually grow like the way the market grows and a bunch of other stuff. But again, I'll have to do a live one day over myths that related to universal and index universal lives. And then another type of coverage out there is called final expense insurance. A lot of this time, this type of coverage is going to be best for somebody that's anywhere from 45 to 85 in age. It's going to give you a smaller death benefit, which mainly is used to replace, mainly used to pay for the burial, any type of final expenses you may have. Maybe you have some medical expenses, or you wanted to leave just like a little bit of money to your family, then you could use something like a final expense insurance. There's another one that's called variable life insurance. I just wanted to touch base on this. I'm not big on like throwing things underneath the bus or dogging things, but variable life insurance is something that you actually put money into mutual funds. And so you now are facing, anytime you have something that's variable, be very careful, because you're facing the fact of losing money. And I'm not one to want to lose money, and I know most people aren't nowadays. So I just like to be very open and honest. A variable type of policy is just one of those types of things that you just have to be really careful with, because you can lose money, and you really want to dig in deep if someone's talking about selling you a variable life insurance policy. So a couple questions I put together for you to ask if you're in the market for looking for insurance is, the first one is, will my premiums increase, or is my death benefit going to decrease? Because there are policies out there that the premium will increase, and sometimes it increases after year 10. I've actually seen policies that they were paying like 15 or 20 bucks a month for, and after year 10 it was going up to like $300 or $400 a month. So you really want to always ask that question. Like, that is a crucial question to ask. Like, what happens to my premiums over the years? Are they going to change, or are they fixed? And then the same thing with the death benefit. You want to make sure that your death benefit does not decrease over time, and that it's a fixed death benefit. Because again, it happens, and so many people will think, oh, I'm getting $1 million policy, but they don't realize that in 10 years it's only going to be 500,000. So you always want to ask those two questions for sure. And then if it's a term policy, you want to ask if it's convertible. So what does that mean? Convertible means that when the term comes to an end, so like let's say you have a 20-year policy, and when you come to year 20, can you convert it into something else? Does that company offer you the option to convert it to more of like a permanent final expense whole life type policy? The reason why is because if you have a term and you want to convert it, then when you are, let's say you take it out at 20, you have it for 20 years, and you're 40 now, and you want to convert it to something that's more permanent, or a whole life final expense, whatever, something else besides a term, Now you're not going to have to go through all the extensive underwriting, and whatever health has happened, medical things have changed since you were 20 to 40. You're not going to have to deal with all of that because you have guaranteed insurability. Again, why I always say it's so important to look at policies, get a policy when you're young, because you're young, you're healthy, you never know what's going to happen in your future in your health. Another question, are there any living benefits with it? So living benefits, these are benefits that cover you in case of a terminal, critical, chronic type illness. They're going to pay before you pass. So you can use them if you have medical bills or unexpected expenses during these times. Let's say you have some sort of an illness and you can't work anymore and you need to supplement that income for a little bit. You could actually utilize a portion of your policy up front. It's not always when you die. So that's very important to ask that question. If they don't, or let's say you have a policy already and it doesn't have any type of living benefits, you can actually get standalone policies that cover things like that, like policies that actually cover living benefits, and they're standalone aside from the policy you have. But you always want to price check that because you might be able to get something that has both of them in there and not have to carry out two policies or whatever the case may be. So you always want to, ask that question. Okay, and then this one I feel like is the most important, and I say this to you because if you were to go through this and you're denied, it's going to hurt your insurability for a very long time. So you always want to ask the question, does your underwriting require a urine or a blood test? If so, then you want to look somewhere else. And I say that because let's say that you have to take an underwriting. Underwriting does a full medical, so blood and urine samples. And it comes back and there's something in there that's not on your medical records, then you get denied. Now there's not any, most other companies are going to not deny you. So if you've ever been denied based on a full underwritten medical policy or company that does that, then you are going to struggle to find coverage anywhere else. So you want to make sure if somebody says, well, we're going to have to do a full underwriting and you have to do blood and urine, say no thank you, I'm going to keep looking. Just because you don't want to, there's so many companies out there that will do what you call a non-medical underwriting. So they pull the records from your doctor's office and they see what's on your medical history, but they don't actually pull anything from your body. So if you have something that's been undiagnosed and they pull your blood and urine, even if it's not on your records, they have it from your body and it's there, so you're going to be a higher risk. So you really want to make sure you ask that question, and don't do the full medical if you don't have to. So these are just a couple things I feel like is so important to be aware of if you're in the market, if whenever you decide that you're going to be in the market, or if you already have something, just kind of go through these questions and ask these before you decide to do a policy. Again, I'm here to educate and help and bring awareness to the world of the insurance industry. I spend Mondays and Fridays doing that. So I thought this was important, and it was stuff I never understood. And so I wanted you to be able to understand it. And I don't even know what I'm saying right now. So anyways, that's all I have for today. I hope you guys have a wonderful Monday. If you're having all the winter weather, all that stuff going on, I hope that you stay safe and warm. We did get our heater fixed, so it's nice and toasty in here, thank goodness, because it was so cold earlier. But thanks for watching if you joined in, and if you have any questions, shoot me a message, drop me a comment, and I put my booking link in the description of the video. Have a good day, everyone.